I'd like now to introduce you to a dear old friend of Rising Stars. The emphasis on dear, not so old. Don Inglis is going to deliver us his keynote address this morning. Don's visited so many Rising Stars conferences. I know you know him personally. Terrific bloke. Great insights over many years. As they say, a bit of grey hair goes a long way, particularly in turbulent times like these. Please welcome Don Inglis.
Oh, thanks for that, Paul. Great to be here again. Looking around the room this morning, it reminds me of that quote by George Burns, the American comedian, when he said that having sex at the age of 80 was like trying to shoot pool with a piece of rope. And another quote by Mae West about, it's not the men in my life, it's the life in my men. And my men over here have got plenty of life. Doesn't look like it yet, but they've got plenty of life, and they're going to be telling us their stories very shortly. Look, I think we're all here probably trying to find another life-changing story that has come through this conference over the years. If you think about the great success stories of Chalice and Northern Star, Mincor, Pilbara, Liontown, stocks that were around 10 or 20 cents, which headed off to $9, $10. And what I thought I'd do is I just sort of run through how I might assess a junior exploration company, as we all get told these things as we go along. First and foremost, you look at the people, you look at these guys, you look at how experienced they are, their age, how much energy they have. I also look at how many boards they might sit on, because guys who cross several boards may get their energy diminished somewhat. I look at how much they pay themselves, as probably most of you do anyway, and I look at what incentives they have provided, just how many performance options or performance rights they've granted themselves. And indeed, I look at the hurdles on those performance rights sometimes, because often they're not actually economic. Yes, you might find another 200,000 ounces, but they may not be economic. So I look at that and assess the lifestyle of some of these guys, and we all look at their behavior, and that's the starting point of the people on the boards. Obviously, we don't want this guy who, in this cartoon, simply says, the salary is unimportant, I'll just siphon off what I need. And we've seen that over the years a few times. Going to the projects, I think these days at the moment in this ever-changing world, the jurisdiction is so important, because I like companies that are in Australia. I think all 5 companies here are in Australia. And without a doubt, that's very important, given the trouble that we've seen, not just in the usual places like the Stans or Africa. We're starting to see some issues now in South America as the nations probably rightly decide that they need a little bit more of their own assets. Is the project a greenfield? I mean, the market loves greenfield exploration. You've only got to look at the excitement that was created by Chalice, the excitement that was created by De Grey at the time, and just recently Galileo. So that's rare that we find successful greenfield exploration. Most of the success stories in recent times have come from brownfields. What metals are they targeting? Obviously, I think it's interesting that we've got a lot of emphasis on EV metals, but you can always sell gold, copper, and nickel. It isn't so easy to get rid of vermiculite, for example, nor vanadium. So let's see what they're looking at, what kind of drilling they're doing. RAB, is it going to be diamond? Gives a better indication, of course. Look at the grades, all important, the widths, the depths, and the resource. Do we have a JORC resource? Do we have indicated, inferred, etc.? All pretty basic stuff, but I'd be looking at that. Then, of course, you've got the great Mark Twain quote, Mark Twain being the source of so many great quotes. A mine is a hole in the ground with a liar at the top. Then we go to the purse. How much cash have they got? How much they spend on exploration versus administration. I always look at quarterly reports, see how much is actually going in the ground as opposed to being spent on administration. Although granted, it's much more expensive to run a company these days, particularly with inflation, issues with fuel, staff supplies. compliance, OH&S, human resources, which I've dubbed human remains, and now ESG. ESG is probably taking a bit of a back burner at the moment because of what's happening in the Ukraine. I think the emphasis there might just be reduced over the next 12 months. And then, of course, that other quote, all exploration companies are come raise, and pretty much that's right. Here's a cartoon board meeting, which even I can't read, where basically the man sitting in front of the board simply saying, tell the public we don't want to hurt anyone, all we want is their money. Market capitalization. All right, how many shares are on issue? If they've got 3 billion shares on issue, there's a fair chance at some point there'll be some reconstruction. How many escrowed shares are there? How many options are there? How many listed options? How many unlisted options? Options have always been an interesting area. You know, I remember back in 1988, a year after the crash when I first started in broking, there's a company called Arboin, and a very affable MD called Jim Yates did a placement to some German investors through a Swiss financier. And about 6 months later, we went across to Germany to talk to the German shareholders who were complaining about the fact that the price had dropped. And he said, no. I said, but you're ahead, you know, with the options. And this voice from the back of the room went, options? What are these options? And of course, the options had been taken by the Swiss financier, and the German shareholders never got them. And I'll always remember that. But that doesn't always occur these days. And then I look at convertible notes, because convertible notes can be a little bit of a hidden time bomb, because you never know what the conversion rate is. And there's been instances in the past where a convertible shares converted to 20 million shares. I seem to remember that with a certain company in Brazil. And just finishing on market cap, I mean, if a junior exploration company has got a market cap of, say, 50 million, and you actually had the money, you know, would you buy it yourself for 50 mil? I look at the top shareholders. Obviously, we like to see directors with skin in the game. We all like to see some funds in the game, although they haven't got much attention span these days. And it's always interesting to see if there's any notable investors in any top 20. And more importantly, also liquidity. How many shares are traded? It's easy to get in sometimes to buy a stock, but it's more difficult to get out. And if you look, for example, say, at Develop, DVP, you know, okay, I declare an interest, but they had a share recon, and that stock can fluctuate 30, 40, 50 cents either way on fairly small volume, because it's a fairly illiquid stock. So, you know, I look at all that. If we've done our homework, doesn't matter if we've done our due diligence, it can all go out the window in the face of sentiment. So in this cartoon, this guy's saying the price of a stock will fluctuate on these three factors: supply, demand, and rumor. And how true is that? And, you know, as we've said before, you know, in a strong wind, even turkeys can fly. And we've also said before, never confuse investment acumen with a rising market. So we move on to, you know, we go down the bank and get the tongs out, and we build our own portfolio. And we think about risk, you know, financial risk. Obviously, you've got to be careful investing in this sector, because a lot of it can be speculative. And I certainly suggest you don't borrow any money to buy speculative stocks. But as I once said years ago in one of these conferences, the biggest financial risk that any of us actually are faced with is the person that you sleep with every night. All right, so we bought the stock, and we've sort of run our risk profile over it, and we hope like hell that something's going to happen. They're going to find something. And then when they do, we'll have a little boat that says, you know, bought low, sold high. Although I tend to prefer the guy who goes out to see his mate with a brand new sports car, and he says, how'd you get that? And he says, sold too soon. And here's the invisible hand of the market. Everybody talks about that. And here's this bloke saying to his mate, I think it might be me actually, saying, there it is again, the invisible hand of the marketplace giving us the finger. I think yesterday gave most of us the finger. And just finishing off, these are just a few axioms, if you like, experiences. I've done 35 years in broking, and some of you will be pleased to know that today is my last day, actually. As of tomorrow, I retire. And I've enjoyed every minute of it, but there comes a time when you've got to read the tea leaves. But anyway, here we are, going through this now. Grade is king, always has been. Doesn't matter what the metal is, it's all about the grade. Projects I'm sure I've touched on already. Be careful about where you think your investment's going. And even though the metal might be hot as, for example, lithium, some of those jurisdictions will be problematic, to put it mildly. Neurology, okay, somebody makes a discovery, all the shares around the discovery go up, but 9 times out of 10, there's nothing there. IPOs. A friend of mine once quoted IPOs as being a transfer of wealth from investors to promoters. That isn't always the case, but certainly in recent times, because we've had a serious run, the second-hand car market has been very, very active. So, you know, the project's taken down the panel beaters, they sort of knock the dents out of it, repaint it, and send it out again with a new driver. And we've seen a fair bit of that lately. Obviously, there's been some very successful IPOs of late, but some are really being products of the market. And that, of course, is where we've seen a lot of spin-offs. I don't mind spin-offs. I mean, if I'm a shareholder and the company decides to spin off one of their assets and I get a pro rata distribution, happy days. But when it gets spun off and I'm expected to pay again for something I already own, not impressed. And there's been a lot of that going on lately too. And when the guys that run one company find themselves on the board of the other company, enjoying the benefits of that, then you could say they might be taking advantage of us. I've never been happy with ETFs, as you know, exchange traded funds. I'm particularly concerned with the synthetic ones. You may have heard me crap on about this a few years ago, where synthetic ETFs, you know, what's on the wrapper isn't necessarily what's in the can, and a lot of people are buying ETFs, particularly in things like oil, etc., and they're actually derivatives inside those ETFs, not actually the shares at all. Rockstar fund managers. We've seen a few of these guys of late have a few issues. Kurt Nielsen, Charlie Aitken, Hamish Douglas at MFG, over in the West, Willie Packer. So a bit wary of that. Similarly, Rockstar CEOs. I mean, we probably know the story in the eastern states about Nev Power. Nev Power was a supreme manager of Fortescue, you may recall, and this guy was chairman of the Royal Flying Doctor Service, he was chairman of the Australian COVID Commission, and he was on 3 boards, and he decided to fly his helicopter across to your fine state and breached all of our COVID restrictions. So he went to court and he was granted a suspended criminal conviction. But 2 companies have put him back on their boards, one of which Strike Energy, because the chairman of Strike Energy is a guy called John Poynton, who you may have read with regard to the Crown Casino inquiry. So he's a mate, and Nev's gone back on the board of Strike. Now, that's all fine and good, but it depends where you set your moral compass and whether you think that's appropriate, given that the guy's defense in his trial was that he had suffered from cognitive distortions. And the question then is, do you want a bloke on your board who has cognitive distortions? So just finishing off, naturally, twin holes, that's been going around for a long, long time. Recycling of previous drilling that's been done in years gone by and presented as a new discovery or some sort of new grade. And I've always sort of found it amusing that if you go into options and warrants and ETFs, you have these ASX codes which have more than 3 letters. I always think you should avoid them. So Ladies and gentlemen, that's about it. I'll be floating around if you want to ask me any specific questions about any specific stocks. There are some terrific companies presenting here as usual, and I'm going to start firstly by introducing somebody who is also a very good bloke, who's been at this conference many times in a couple of different guises. And Chris Cairns is our first presenter of Staveley Minerals. And here he is. Please welcome Chris.